With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then channelchek truly is the orchard. The listed companies support channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by channelchek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on channelchek. Today's interview features Salem Media Group, NASDAQ ticker symbol SALM. Noble Senior Research Analyst Michael Kupinski interviews Salem Media EVP and CFO Evan Masyr. Visit channelchek.com or click the link in the description for Noble's research on Salem Media Group, as well as news and advanced market data. And now, here's Michael and Evan.
Well, thank you for joining us. I'm pleased to have Evan Masyr, the Chief Financial Officer of Salem Media Group, join us today. Evan, thanks for joining us.
Thanks, Michael. Appreciate you allowing us to do this.
You know, Evan, you've been in the business a long time now, and many may not know how you got started in the business. So I was wondering, can you tell us a little bit about yourself and maybe a little bit of the history at Salem?
Sure. I started at Salem February 7th of, actually remember the date, of 2000. I started as the controller. The company had gone public mid-1999 and realized they didn't have kind of the bench that they needed for a public company. And the opportunity just kind of landed on my lap. I was living in the city where Salem's headquartered Camarillo and commuting just past it for another 52 miles. So it was a very welcome relief to have a 4-mile commute rather than a 52-mile commute. Like I said, started as controller and had various opportunities for promotions throughout my time here, and then took over the CFO role July 1st of 2007, just as we were starting to see the recession starting to hit. So a great time to become CFO of a company.
You know, and the other component of that is, since you've been there quite some time, a lot of senior management's been there for a long time as well. There's been very little senior management turnover. Can you give us a little background on the senior management at Salem as well?
Yeah, certainly. So we have our two founders. Edward Atzinger is our Chief Executive Officer, and Stuart Epperson is our Chairman of the Board. And the two of them date back in radio to the 1960s. And the first station that became kind of part of Salem was KDAR in 1974. Edward put on the air, and it's up the road from here in Oxnard, California. And it was the first really 24/7 Christian teaching and talk station. And in 1986, the two founders pooled their assets together and created what was then Salem Communications Corporation. And then the rest of the executive team, our president of broadcast, president of our new media, and then our general counsel, they all also have about 21 years. So we're all kind of in that 21 years of experience and have had a lot of time working together and seen a lot of things during that time period.
I would imagine that level of experience came in handy during the pandemic. Last year at this time, it was pretty scary. The pandemic was just taking hold and the government shut down the economy, and you're sitting on quite a bit of debt. I would quickly add that the company has always carried a heavier debt load than most of its peers, and you have some recession-resistant businesses. But, obviously the pandemic, it could have been a different situation. So was the pandemic different from past recession cycles in a way that you dealt with the crisis? And if so, what was different and how did you manage it?
Well, I think the difference was how quickly it started. I mentioned that I became CFO in 2007, and we started to see the beginning of the recession. We're seeing financial services category starting to have problems, and it was a slower build, whereas the pandemic, it just happened seemingly overnight, where mid-March hit and all of a sudden we were having days of hundreds of thousands of dollars of business being canceled. So it just happened a lot more quickly. But because we had been through the Great Recession together as an executive management team, we kind of broke out the old playbook. We looked at some of the things that we did that worked and figured, could we do some of those same things? We unfortunately had to have some layoffs. We did across the board salary cuts in response to the declines in revenue. But again, this was different. You mentioned the high debt load. Our bigger challenge that we saw was a liquidity crunch. We had a big interest payment due June 1st, and with revenue kind of evaporating, it was something we were concerned about. One of the things that we did this time, but certainly not during the recession, because of that liquidity need, is we went to some of our top ministry partners. We do a lot of block programming, national Christian ministries that buy blocks of time from us Monday through Friday at a certain time frame. And we went to some of them and said, hey, look, we'd really like you, we really could use some help. We'd like you to consider paying your airtime bill that you would normally have from May through December and pay it all in the month of April, or actually we really wanted it in May. We started talking to them in April. Pay the airtime bill in May and we'll give you a 5% discount. And overwhelmingly, the response was yes. They helped us, and we wound up getting over $8 million of cash. Turned out our cash balance never got that low, and we didn't need it. But it really underscored the relationship we have with our block programming partners. It's and notice the phrase I use, block programming partners. We don't really refer to them as our customers. They are our partners. And we had some ministries say to us, hey, when's your next interest payment? If you need help in December, let us know. We'll help you by doing the same thing. And so that really showed to us the value that that we're bringing to them, and we already know the value that they bring to us and to our listeners.
Evan, was that the first time in the history that you've actually gone to your ministries to give those discounts and get that paid up front?
Yeah, we had never done anything like that in the past. Never had the need to.
Yeah, well, it was a brilliant move. And for those that may not be familiar with your block programming and a little bit about Salem in that regard, can you just kind of talk a little bit about the block programming and what exactly you do, because it is so unique in the industry?
Our main format, or kind of our foundational format, is Christian teaching and talk, and it's probably about half of our radio revenue comes from that format. And that format, a given hour, will have typically 2 ministries that buy time from us, maybe from 8 to 8:25, and then we'll have 5 minutes for news, traffic, weather, commercials, and then from 8:30 to 8:55, another ministry is buying time from us, and then we'll have, again, time from 8:55 to 9. Now, during that 25-minute block of time, it might be Focus on the Families, one of the more well-known national Christian radio ministries. They're buying time from us. And what they're doing at the end of their program, and the ministries all handle it a little bit differently, but they're ultimately looking for listener support. They may outright ask for support. They might say, if you like today's message, we have a companion DVD available for any donation of any amount. But the key is to get support from our listeners. And also, it's to impact the culture, right? So that's what they're ultimately after, but they need some fuel to feed the engine. So, when let's say a new ministry starts in a time slot in one of our markets, it takes them a few years to break even. In other words, they're paying me more than they are bringing in support, but they're slowly building up that donor list, and they're building up that monthly support. By about year 3, it hits break even. Maybe a couple of years after that, they've paid off any debt that they incurred during those first 3 years of startup. And then it becomes like an annuity. You go during the Great Recession, we had very little turnover. During the pandemic, we had almost no turnover on programming. We did with a few ministries that a lot of their revenue comes from live events. Obviously, they couldn't do the live events, so they had to scale back a touch. But we push rates with these ministries every January 1st with the national ministries, and the rates are somewhere usually between 2 to 4.5% rate increases. And we get 95, 98% renewals. It's just a very predictable, recession-resilient business that pretty much no one else does. And they come to us because they know that we're gonna stack a quality Christian program after another quality Christian program, and they know we're in this format for the long haul. We're not going to say, this format isn't really working. Let's switch to, contemporary, adult contemporary music, or let's switch to sports. They know we're going to stick in this format and that they're going to be able to recoup their investment, impact the culture, and hit some of the things that they want to do.
What's interesting is that Salem has, while it has its roots in the radio industry, was probably one of the first companies that really diversified its revenue streams outside of just spot advertising, block programming being one, of course, but then you kind of moved into other business lines, including digital publishing and so forth. And so I want to kind of touch on those diversification efforts. What are your thoughts about further diversification? And I want to get back to radio and talk a little bit about your network business as well. But what are your thoughts right now in terms of further diversifying outside of radio?
Well, I guess if I were to think about acquisition dollars and where we'll spend acquisition money, it'll be rare, I think, that you'll see us buy much in the way of radio. I know we just did announce 2 radio stations in San Francisco that we're buying for $600,000. That was kind of unique. It's in a market that we're already operating. It's actually, one of the stations is a competitor doing Christian teaching and talk, and it's rare. I've been, as I said, with the company 21 years. I can count on one hand the number of times we've bought a station that's been in format. So we could take the revenue and not have to take really any of the infrastructure and overhead, and so we can get a pretty attractive multiple on a station like that. So there'll be more opportunistic or unique opportunities on the radio side. Where I think you'll see us spend more money is on digital. We announced a $1.5 million acquisition of Salem Media. So that's where you'll probably see us diversify more into the digital side. It's just that's where consumers are going, and we want to meet the consumers that are interested in Christian and conservative content wherever they're going.
One of the things about Salem is that you have this great network business, which is kind of getting a little bit of a spotlight now shined on it because of the fact that Rush Limbaugh, which is obviously a conservative talk radio host, passed away. And it seems like there might be some opportunities for some of your conservative talent. What are your thoughts about, because it seems like you're getting more and more noticed by mainstream media across platform for some of your talent there. Could you just talk a little bit about opportunities on your network business?
Yeah, I mean, first of all, our network business, as you were saying, there's been a light shined on it. I mean, it's definitely risen over the last several years, and all of our hosts are gaining traction and gaining affiliates. In particular, you talked about the Rush Limbaugh time slot. We have Dennis Prager always went head to head with Rush. So as affiliates are looking for something to replace Rush, they could always take Dennis Prager. But we also launched in October of last year the Charlie Kirk Show, also in the same time slot. And he's quickly growing in the number of affiliates, and we think he's a very talented individual, does a great radio show. He already had a podcast, which is part of our Salem Podcast Network as well, but this is his first foray into having a real radio show. And we think there's a lot of opportunity there for him to pick up affiliates as well. But it's all about getting some recognition. Hugh Hewitt, as you probably know, you see him on a lot of the Sunday morning shows, and you see a lot of our hosts. Larry Elder, I see a lot on Fox News, and as they get more well known, other operators want to have them on their radio station. So we've been really pleased with our growth in affiliates and our growth in revenue on the network business.
And Evan, the great thing about Salem is that you're looking at diversifying into other areas. You came up with a couple of really interesting products that seem to be really good key growth drivers for the company. Salem Surround being one of those. But a number of companies offer digital services, including web design, search optimization, and social media marketing. What differentiates Salem Surround from others, and how do you gauge the market opportunity for your services?
First of all, I think the market opportunity is huge. I mean, it's really significant. We've done some studies. We've looked at just various metrics out there, and we think there's a lot of opportunity for Salem Surround. But a couple of things that I think about of what differentiates us. I mean, we've quickly developed an expertise in the area, but the other thing is, study after study really shows and emphasizes, radio plus digital gets better results than radio alone, or digital alone. I was looking at a study that showed that radio generates about a 30% lift in search results. So, if we can have a spot voiced by someone like Dennis Prager or a trusted host of ours, and people are hearing that, and then they're going online and they're seeing ads for that same product, the responsiveness is a lot higher. And so we think because we can offer radio on top of the Salem Surround digital efforts, we think it's a greater opportunity for advertisers and customers.
And Evan, do you plan to offer Salem Surround only in markets then where you have radio stations?
For the most part, I mean, we've looked at like a subscription business, and we're going to continue to look at the subscription business because we know others are doing that and having success. But we think the best opportunity is to have a local rep provide, better service to our customers being local rather than doing a subscription when you're not in that market. So right now, that's really our emphasis and our focus, but we certainly continue to look at the subscription type of model as well.
One of the subscription businesses that you have is Salem Now, and I was wondering if you can, talk a little bit about that, maybe provide a little detail, to people that might be watching. Do you also see that company developing more original content or even buying programming to support maybe a full-fledged effort to build a subscription pay service that might be centered on conservative, Christian, maybe traditional values? It would seem like there might be a market for that, given that mainstream media seems to be going the other way.
It is true. Mainstream media is definitely going the other way. But, for those that aren't familiar with Salem Now, it's really a kind of on-demand streaming service. So not a subscription model yet, but we offer various titles, movies, even some of our content like, we've had a program, Ask a Jew, Ask a Gentile. We've had that recorded, and that's something that you could stream and download. Some of the content's free because we want to get people onto the service, but then we will be a distributor for movies as well. So one of the ones that comes to mind, one of the more successful ones that we had was a movie by Larry Elder and others called Uncle Tom that came out just about a year ago. Was very successful, and it was just available on streaming, or you could buy the DVD or a combination. You could buy both. So yeah, we're looking for more content, more either content from producers that make it. Would we consider putting some of our own content on there or investing in content? Yeah, possibly. And ultimately, look, if we can get enough content there, it could be a subscription service, but I think we're a little away from doing that right now. But we do realize it's an opportunity where, as you were saying, kind of the mainstream is moving in a different direction. And, some of the producers are coming to us because they can't find distribution because, their content might be something that's about conservative values. And in this kind of woke culture that we have right now, Netflix and Hulu and others might not want to take that content. So they're coming to us, and we offer a pretty good revenue opportunity for them. And it obviously works for us as well. Plus, we can market it, right? We've got a number of news talk stations where we can market programs. If it's a Christian program, we've got our Christian stations as well. And then we also have all of our websites. So not only do we offer a distribution channel, we also offer a marketing ability for them as well.
Well, it seems like there's a market for it. I mean, I had friends that watched the Grammys, and they were telling them they had to turn it off, when they're, because their kids were watching it, and it just seems like there would be a definite market for that. Certainly, in the audio space, one of the fastest growing components of audio right now is podcasts. It's a hot space right now. Can you give us some color on the types of content and growth drivers you see for Salem's podcast business?
First of all, we've been podcasting for a lot of years. Our national hosts all have a commercial-free podcast you can get for a monthly fee, and they've all been available that way for, like I say, probably a dozen years. But we just recently launched the Salem Podcast Network. Our first podcast under that was Dinesh D'Souza's podcast. We've since added Charlie Kirk and Todd Starnes, and we're going to be adding others as well, other high-profile conservative podcasters, because we just think there's a great opportunity there. You're right. I mean, it's one of the areas on audio that is growing, and we're finding that there are ways to make money on that. There are a lot of revenue opportunities where the host can, bring in, either they can air a commercial or they can read commercials. I've listened to some podcasts where it's, the host just talking about a product. So we think there's a lot of opportunity there. And again, it's something we can promote on our terrestrial platform and on our digital platform. So definitely some great opportunities there, and something that we're very focused on.
Going back to your diversification efforts, I just want to chat a little bit about your web-based business, your digital businesses. You've been buying web businesses focused on conservative and Christian values for quite some time, and folding those into your infrastructure, cutting out a lot of costs. That strategy served you well for many years. What is the direction that you're taking your digital web-based businesses at this point?
Well, we're taking a lot of different directions. Obviously, we have our if I think about our national digital division, which I want to mention is profitable. If I look at 19, 20 it was profitable as well, but I don't think 20 is a good year to kind of look at. We had north of 40 million of revenue and 8 and change million in profits. So you're talking, I think we were about a 21% profit margin for our national digital division. So there, obviously, we've got your typical ad-driven revenue where you go to a website and there's banner ads. So there's that. We've launched Town Hall VIP, a subscription service where you can get enhanced content and content that's only behind a paywall. That's grown nicely. We're looking at other opportunities where you can do subscription type business with our national digital division. We've, on the local side, I've already mentioned kind of some of the digital things that we're doing with Salem Podcast Network. We've talked about Salem Surround and Salem Now. So, it seems like from a, where we're headed on the digital side, it's kind of in a lot of different areas, because we just think we're going to where consumers want to be. So our focus is not on one thing other than where the consumer is going.
Yeah, I'd like to turn a little bit to your publishing division. Your publishing business was largely conservative titles, and you've had a recent move to develop more Christian faith-based books. What is your strategy for this business? Is there a growth business here?
We do think there's opportunity, especially, let me start on the conservative side in today's culture. I hate to keep going back to that, but this culture has created some opportunities. For example, Senator Josh Hawley had a book deal with Simon & Schuster. And because of some of the events that happened in January, they decided not to publish his book. By the way, not the first time we've seen things like that happen, where someone was going to write a conservative book and the publisher didn't like what was actually going to be included in the book, and they wound up yanking their deal. And they've come to us. Josh Hawley's book came out earlier this month, The Tyranny of Big Tech. I know I'd looked at it kind of early in the month, and it was, a top 10 seller on Amazon. So it's doing well. So we think, some of the good conservative books, a lot of them will drop to or come to Regnery that may have gone to some of the traditional New York publishers that may have offered bigger advances. We are pretty conservative on the advances that we give. We'll give some advances where we think it's good, but and that we think we'll earn it out. But we're not going to swing for the fences as much as maybe some of the others do. But we think because of this culture, people don't have a lot of choice, right? They're getting book deals yanked like Josh Hawley. So we think Regnery has some real good growth opportunities. But what we've segued to also is we have an imprint now called Salem Books. If you think about it, now we have experience in the book publishing business. We already have relationships with a lot of the top Christian theologians in America through our national block programming. And they all write books. Now, most of them already have book deals, but we're working with them to say, hey, let us be your next book publisher. We can help promote the book better on all of our radio stations, better than maybe another Christian book publisher, because we have the radio assets and we have the digital assets. A great example is Pastor Greg Laurie just had a book come out, I think it came out last month, about Billy Graham. And that book's doing well. The one difference about Salem Books versus Regnery, the conservative books, Regnery, a political book, will sell really nicely and then quickly go back down. It's just a very short-lived title. Books that are focused more on Christianity and Christian values, have a little bit longer of a shelf life and a little bit more of an evergreen nature. So we're excited about that opportunity where you'll have kind of a backlist sale as well. So we think there is opportunity in the publishing business, and we're still pretty bullish on it.
I go back to my days as an analyst covering Thomas Nelson, and of course their base of their business was Bibles and so forth. How deeply do you think you'll go into the faith-based book publishing business? Do you think that there's an opportunity for you to actually go into Bible publishing?
It depends really. If you think about a lot of the Bibles there, like Thomas Nelson has the rights to some of the Bibles. Zondervan has the rights to some of translations of the Bible. So right now, I don't think that's an area that we're going to go into, but if an opportunity presents itself, it's something that we certainly would do because it's something that we, firmly believe in. So.
And, I kind of want to shift, going back to a little bit about the debt. Traditionally, as we said before, you maintained a higher debt leverage balance sheet than historically, I think carried at about 5.5 times on average, whereas the industry was, kind of trending in the 3.5, 4 times range on a debt to EBITDA basis. So your leverage has been a little higher now. Can you talk a little bit about where do you think that leverage will be over the next couple of years? At what level would you like it to be? Kind of give us your thoughts about debt leverage going forward.
To first of all, to address the, we carry a little bit higher debt. Part of it is our business is a little different. Having that kind of predictable nature of the block programming gives us a little bit more comfort with historically a higher debt level. Now, during the pandemic, our debt rose, our leverage ratio rose to, I think 896 was the peak, but I know many in our space were double digits, and some might still be in the double digit range. We're now down to about 7.3. Not thrilled with 7.3, but it certainly is better than 9. But the one thing that you have to take into account looking at our debt leverage is, we don't typically do this, but now we carry a fair amount of cash. We had $20+ million at the end of March. And if you do it on a pro forma basis, if we just did kind of net debt and the fact that we got $11.2 million of PPP loans that we expect to be forgiven, but right now that's debt. But that if we pro forma for that forgiveness and for using that cash to pay down debt, that gets us to a 6.2 number. Now that's also before we announced when we did our earnings release that we entered into a deal with someone to buy a parcel of land in Dallas. AMs tend to have larger parcels of land because you have to have the ground systems, right? And so we're retaining a smaller portion of the property, but we're getting $12.1 million. We're going to broadcast from that small parcel. And again, if you were to factor that and say $12 million to go against our debt, it brings that leverage even lower. And as we discussed on our earnings call, there are some other real estate deals similarly that we're working on. Remember, we're a large market broadcaster. So while these properties might be, not in Dallas proper, but outside with urban sprawl, these parcels of land have gotten more and more valuable over the years. But to get to where we're comfortable, I mean, we certainly ultimately want to get to something below 4. We have our current debt matures June 1st of 2024, so we kind of have a couple of years before we'd like to refi. So we'd like to get as close to 4. Certainly want to be well under 5 by that time. And we've done some models where we think we can get to a comfortable place by the time we need to refinance.
Evan, do you have a thought about how much the real estate might be worth? I mean, just a ballpark number where, in general, that you might be able to monetize over the next couple of years?
I mean, it could be a pretty nice number. We haven't disclosed that number, but we're continuing to work on real estate deals to see that where they make sense. And it's kind of an interesting math that we're going through. We're looking at the parcel and what it's worth, looking at the radio station and how much cash flow it's generating. Where could we move that radio station? Sometimes it's diplexing at a location where we already are operating. What are we going to lose in the way of coverage? Even in some cases, we've seen and talked to folks where there might be a plan where they might build a warehouse and we can put the towers on top of the warehouse so we wouldn't lose any coverage. So there are a lot of unique opportunities out there, and we're looking at the ones that make the most sense for us.
Like many companies last year, you went through a round of cost cutting. And can you kind of give us your thoughts about, and I believe you're kind of rolling back some of those pay cuts that you had. Can you give us some thoughts about what costs might be permanent reductions and whether or not there might be additional opportunities for you to cut costs elsewhere?
Yeah, so our main cuts that we did, we obviously furloughed some people, in particular people that worked on a lot of our live events. Those weren't happening last year, and but we did a meaningful round of layoffs, and we did across the board salary cuts, and we stopped matching on our 401k. Beginning in January, we rolled back those pay cuts because we just saw that things were getting better, and we didn't want to kind of ride on the backs of our employees. We were very appreciative of the fact that we got through it, but we felt it was the right thing to do. So what's permanent? Clearly, we're not rehiring those that were laid off. The 401k match hasn't come back yet. We're going to keep evaluating it. My expectation is that we would probably come back in the beginning of 22. So really the layoffs are the permanent cuts. But as far as what we're looking going forward, I think we run a pretty lean operation. I mean, in some of our markets, you have people wearing 4 or 5 different hats. Just there aren't that many people sitting in, the studio, right? So what we're really looking at is where we can get operating efficiencies. One example comes to mind when I think about this is we have automation systems at a lot of our markets. It's very common in radio that at 3 a.m., even though it might sound like someone's live, there's nobody in the studio, right? We have a number, I think we have 4 different vendors right now that provide automation systems throughout our various stations. And so we're looking at getting one automation system where we can get some efficiencies on costs. And we see some opportunities also from a revenue perspective as well from doing things like that. So I think that's more of our focus, where we can get some operating efficiencies and there we can get some cost savings.
And the company recently changed auditors, and usually this can be a little disruptive. What led to your decision to change auditors, and what do you believe that this will be? And do you think it will be a smooth transition?
Well, it's funny, as I was going through cost saving opportunities, I was debating on whether to bring that up. Look, we doing kind of the math on what we were paying our auditors based on the engagement letter plus what we would seem like every quarter we were having some overruns. The fees were just getting exorbitant and more than they should have been. And so one of the primary factors was the phrase I've used was fee fatigue. Every quarter just getting, hey, we need to bill you more, we need to bill you more. And so, we think there's a couple of $100,000 of annual savings by changing auditors. Do I think it'll be disruptive? Do I think it'll be smooth? Look, these things are always a little disruptive. In particular, not necessarily for me, it's going to be for my team. And I certainly leaned on them to say, are you sure you want to do this? Because they're the ones that are going to suffer the brunt of the blow. My controller, my financial reporting manager, they're the two in particular that will be impacted the most. But we're very confident with our choice of switching to Moss Adams. We've had a lot of dialogue with them in the past, and we think it will go as smooth as one of these things can go.
Evan, Ed Atzinger has always been a deal maker and not afraid to diversify the company. And I know it sounds like the next couple of years you're going to be focusing on debt reduction, but what are your thoughts about how Salem Media will look maybe over the next 3 to 5 years? Do you see the company structurally changing?
I think where you'll see change is really on the digital side. I think you're going to see, right now it's about 28% when you take the national digital division and the digital revenue that's at the local markets. That's 28% of our revenue. I would assume that if I had a crystal ball and I could look at 5 years down the road, that number is going to be quite a bit bigger, just because people are consuming media differently than they have in the past. And so I think, as you said, Ed's not afraid to make deals. I think we're going to make more deals on the digital side, certainly more than on the broadcast side, and probably more than on the publishing side. So I think that's what will be probably the biggest change 5 years down the road, is you'll see a much bigger percentage on the digital revenue front.
What's interesting, Evan, is that if you look at the current stock price, you might think that the stock's not even reflective of your current digital businesses. The stock has fallen from recent highs of 3.5 to below 2, and it seems like maybe investors don't give you credit for your digital businesses. Why do you believe the market value of the stock may not be reflective of the company at current levels?
Yeah, first of all, you're absolutely right. I think that one of the biggest things that's missed is the digital component that, as I said, it's 28% of our business. It's profitable. The National Digital Division in a normalized year, was a 20+ percent profit margin. So I think that's missed. I think one of the reasons why people don't know it is we don't have a ton of analyst coverage. I think the more coverage we can get, the better. I just don't think people also understand Salem because it is a complicated business. It's not just, hey, you turn on the radio, you listen to it, and you get spots, right? I think it is complicated. The block programming, I think, confuses people. They don't quite understand how that works. And I think also some people just look at radio and just kind of have put it out to pasture. Yet, I've been with the company, as I said, 21 years, and every year you had Arbitron and now Nielsen study the number of Americans that listen to radio on a weekly basis. And it's kind of vacillated during that time to either 92, 93, or 94%, and nothing different. Time spent listening may have gone down some, but the fact is radio is still a very viable medium. We see it in results for advertisers. But I think, a lot of people just hear radio and they just kind of dismiss it, and they don't know enough about our digital business. And, getting back to analysts, we do have 2 analysts that cover us, you and another one, and our, the target stock price is between 4 and 4.25 by, both analysts. So again, I just don't think people really understand. We're trading at $1.80 something right now. We should be much closer to that $4 range.
Thank you for joining us for this C-Suite interview presentation brought to you by channelchek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.